Imagine you build an estate with your life savings. It is sold out, you're popping champagne, you're happy, and you're like, God did. Then, one fateful day, a letter arrived, court order. Your property is under dispute. You're sweating. Then you called your lawyer. The man says, sorry, sir, this affects your main company. All your assets are at risk. Like, wait, all? Yes. If only you use an SPV, it won't be this way. Because in real estate, if you don't separate your baby project with the main or big company, you're dancing with rigs, and rigs know the smile. So today we're gonna be breaking down this mysterious thing called SPV, special purpose vehicle. What it is, why developers use it, how you can use it, and why even Dangote loves it. Stay with me because this one is gonna save your pocket a whole lot and your peace of mind. Now let's remove the grammar first. SPV simply means special purpose vehicle. It is not a car, it's a company created for a special purpose. Think of it like your side hustle company. Your main company is you, SPV is your business speaking, created to do one specific thing. So if your main company is, let's say, Prime Estate Limited, and you want to build a new project, let's say Palmview Gardens, right? Instead of you using Prime Estate directly, you form a new company called Palmview SPV Limited. That small company takes, or let's say owns the land, takes the bank loan, does the project, everything for that one estate. It's like giving each project their own wrapper. So in case any wahala burst, everybody will carry their own thing on their head. It's not going to affect the rest. Now you may ask, why can't I just use my company name for all of them? Because my brother, wahala no dey send invitation card. Mm-mm. So what are the reasons why SPVs are like real estate insurance? One, risk isolation. If one project crashes, market downtime, bad partner, or dispute, it does not swallow your whole business. Your main company is still safe. Two, investors' confidence. Investors love clarity. If they are investing in Palmview SPV Limited, they know exactly where the money is going. No mix up with your other five estates or a car loan from GTB Bank. Three, easier to get financing. Banks and lenders prefer when you have a clear project structure. It shows that you're organized, you're not just building dreams and vibes. Five, partnership and joint ventures. Let's say you and your friend want to develop an estate together, like a 50-50 thing. You guys created an SPV for that project. That way, everyone's interest is protected legally. Even if your friend wants to work tomorrow, SPV, that SPV you guys created protects your portion. Now, how does SPV really work in Nigeria? In Nigeria, an SPV is just a limited liability company, right? Registered with CAC, same as your regular business, but the intention behind it is different. You will register it as a new company, e.g., Panview SPV Limited. Put the shareholders, usually the main company or the project partners. You will define the project in the company's objective. Open a separate bank account, keep a separate books and documents. Then you move the property ownership, that is the land, to that SPV's name. So technically, the Palmview SPV Limited manages the estate project and owns the land. So you see, it's not magic, just small structure. But that small structure can save you millions and headache. Now, if you think that it's only small developers that uses SPV, you are playing. Let's talk. You see, Dangote's group has SPV for different projects. Refinery, sugar, cement, they are all different. You see Lekki Gardens, Landwey, Revolution Plus, all of them have, for their projects, they have separate SPVs for all their projects. Even government uses SPVs for PPP projects like toll roads and housing development. So when you see Palm Views Limited or Sunrise Homes Limited, that is there is an SPV sitting under that brand. So you see, the big boys move smart. They don't just mix vibes, liability. Now to the big question: how can you set up your own SPV for your real estate project? One, register with CAC. Choose a name that reflects the project. For example, Palmview SPV Limited. Directors can include your main company or your project partners. Two, defined shareholding. Clearly state who owns what percentage. If it's your main company that owns it, then let it hold it. Three, transfer ownership. Transfer the land titles to the SPV's name. That makes it the legal owner of that property. Four, open bank account. Your SPV should have a separate bank account. Do not mix it with your other companies, money or anything like that. Keep it separate and keep it specific. Five, file taxing and annual returns. Yes, even SPV must pay their dues. Don't allow FIRS to catch you slacking. It's not be funny. Please don't rush and register 10 SPVs like you're opening a Bet Niger shop. There are mistakes to avoid. So now let's talk about them. One, using SPV to hide your shady transactions. If EFCC or CAC finds out, it's not going to be funny. Two, not keeping proper documentation. Three, mixing funds between SPVs. Four, not dissolving the SPVs after the project has ended. Five, using same directors for your SPVs without structure. Separate your governance. Now you know that SPV is not some investor's foreign code. It is your best friend in real estate if you want to build wealth without drama. Create structures, protect your assets, think like a CEO and not a hustler. Because not when the big boys finish, a project and they're pumping champagne. You on the other side, you're hiding from your creditors. You don't want that. Now, before you buy that land or build that estate, ask, do we have an SPV? Because if you don't structure your business will structure you, and that's not going to be fine. Now, please, if you found this video helpful, please, I am begging, help to hit that subscribe button, like and share. Bye for now.